Hey, good morning, everyone. Ben Walker here from Inspire, and we're just waiting for a few people to join the webinar. I might give it a minute or two while everyone dials in. I've actually, for the first time in ages, I'm actually going to give the polling a go, which is pretty cool, just to see where people are joining in from, and I think it gives you live results, which is exciting. So I can see that. So the question is, where are you joining in from? Now we've got 23 people so far on the call, more joining each second almost, and over half of them are actually from Queensland. We got 5% or one of them from New South Wales, 5 from Victoria, 1 from WA. A few people on the call, and I think we might be unevenly weighted because half our team are on the call as well in Queensland, but very cool. Hey, I just wanted to also welcome my co-presenter, Rizal Ramzan, who's just joined, and you might be able to see his smiling face there. But, thank you.
Hey everyone, I hope everyone's doing well today. Yeah, we're seeing some of the numbers climb up. Thanks for the quick intro there, Ben. And just welcoming the other team members that's joined as well as a panelist today. We've got Gulshan, Jamie, and Sakshi joining us to answer some questions as well, and maybe some others joining later down the track. Just want to say hi to a few of our clients as well here. Hi, Corinne. Hi, Karen. Olivia's there as well. Mr. Ross, Shari, Steve. Sorry if I'm missing anyone else. Yeah, it's quite a long list. But hi, everyone. Hope everyone's doing well.
Awesome. Fantastic. And actually, just before we start, this is a bit of an interesting question because we've had kind of mixed feedback with how our clients are going. We've seen some of them, I guess maybe a small percentage who've been really suffering in the effects of COVID. Most people, though, I'd say are doing okay. In fact, maybe due to the stimulus measures, they've actually got a bit of cash in the bank, which is exciting and cool. And then some of them, maybe a select few clients, are actually doing really, really well, which is kind of cool to see. But what I might do is just ask the question, do you feel your business is doing better or worse as a result of COVID? And I might just sort of say in the last couple of months, last 3 months. So I'll just shoot that question out to everyone there to pop an answer in. So better is obviously doing noticeably better, and whoa, we're seeing a few. That is fantastic. I'm getting these live results, by the way, and there's more people currently doing better than worse, which is exciting. So I'll leave that go for maybe another 20 seconds.
Really cool. And just some housekeeping stuff as well. Throughout the whole presentation today, if you have any questions, we do have a team of accountants answering questions in the background. So feel free to use the Q&A section, and that's different from the chat box though. So if you use the Q&A section, we'll be able to answer questions sometimes live to you, and also we might even bring your question in as part of the presentation as well, because if you have a question, it is likely that some people have the same question as well. So don't be shy to use that Q&A button. We have the team of accountants trying to help you there as well. Objective today is for you to get as much value out of this today, to make clear out of what's been happening in the JobKeeper world. It's getting more and more complex as we go along. But as a general note, what we're seeing is the federal government's looking at making the JobKeeper a bit more strict or stringent, just because they want to make sure that they're helping the people who need the help. So you'll see some new rules come up as well to help businesses that are truly impacted, and also employees that are actually long-term employees who's worked minimum hours in the business as well. So really interesting. But as you know, as they introduce more rules, it means it becomes more complex. But that's what we're here for, just to make sure that we can explain it in a relatively simple terms. And we're going to remain fairly high level, but practical at the same time.
Awesome. That's fantastic. Thank you, Riz. And just before we kick off, because we are ready to go, I think the results are being shared on the screen that, I guess businesses, the kind of leader of the people on the call eight out of the 29-ish who responded. Not sure exactly how many responded, but call it a third are worse off, a third are better off, and then a third are no change at all. Which, I guess that's a positive thing in a sense. Where I guess we originally started thinking that COVID was going to be the end of many businesses, but I think that's fantastic sentiments considering. All right, well, I'm going to get rid of the poll, and we might kick off then. Now, I just wanted to do a quick introduction to myself and Riz. So I'm the founder of Inspire Life Changing Accountants. Sorry, there we go. I actually, just a cool note there, I started Inspire almost 7.5 years ago. About 3 years into that journey, Riz joined, which was pretty exciting. And Riz is one of our senior accountants here, who's also got his chartered accounting sorted. And Riz is also leading up a team of accountants who, I guess you've done a lot of research, especially into the alternative tests with JobKeeper 2.0, which wasn't really too clear at the start of all these announcements.
Yeah, it's a lot to go through.
That's it. Just a very brief update from an Inspire business perspective. We had a crazy June quarter. So June quarter was JobKeeper 1.0 when that all came out. And we tallied up between the clients that we helped access this for. There's about $3.37 million worth of JobKeeper 1.0 that we helped our clients access. The tax savings during the quarter was 1.5 mil, and also cash flow boosts that was on the BAS added up to about 2.5 mil. So about $7.5 million worth of stimulus for our clients, and that's just the ones we assisted with. So some people did it themselves, which isn't actually included in here, which is cool. Now, in terms of the September quarter, it was a bit of a crash running up to 30 June, but we've actually made progress on about 2/3 of our clients' tax returns, which we call internally, we call it YE by YE, which stands for year end by the year's end, which is in our term, the goal is to get all of it done by the end of December before we go away on Christmas. So we've made good progress on it. We're already seeing quite a few clients where that's already completed. Also, the end of June, start of July, we actually moved into our new office, and there's a sneaky photo here down on McLaughlin Street in Fortitude Valley in Queensland, which has been exciting for the team to come back to. Of course, most of the time we're socially distancing and all that sort of fun stuff. And you can even see the bottle of sanitizer on the desk there. And the team has grown by 4. So we've had Karan and Sequoia, they joined us in July, and Dario and Glaze are actually joining us in about 2 or 3 weeks. We're growing the team to help with the workload and capacity needed, which is also pretty exciting for our team because we can get back to kind of normal-ish hours. Also, Riz mentioned this earlier, but we've got most of our accounting team on the call today as panelists. So they'll be answering Q&A in the Q&A. So this is confusing, but the Q&A box. So if you see in your little control panel, you might see a box that says Q&A. If you ask a question there, then our team of accountants will be there to answer those questions as we go through. And then briefly, what we're going to cover with the agenda is the Jobkeeper Extension. So, maybe a recap on JobKeeper 1.0 and then the changes with 2.0. We'll go through eligibility, like the basic criteria, and then after September, have a look at what the payments are reduced to, and then have a look at alternative tests. So we're going to spend a bit of time on this because this is usually what we see is most, not all of our clients, or I guess it's not super clear if they're instantly eligible just from having a quick look at their Xero file. We actually need to have a look at some of the alternative tests, I'd say, for the majority of people who are claiming JobKeeper, which is actually quite complex.
Yeah, I guess, sorry, but just on the agenda, before we go forward, just a few things of reminder. Everyone's on different tracks here. Some people
Mm.
have been on JobKeeper 1.0. Some of you might have not applied for 1.0 and now it's eligible, maybe because you're based in Victoria, things have gone worse, things like that might have happened. So we're trying to answer as many questions or try to present it in the best way possible that everyone gets value. But where we've kind of structured this presentation today is to make sure that we cover off on what it's like if you were on 1.0 and if, what are the things that are going to change and some important things that you have to take into account for JobKeeper 2.0. But at a very high level, JobKeeper 1.0, the original JobKeeper has finished. That was on the 27th. That was on Monday.
Yeah.
Now, no matter what, JobKeeper 2.0, you still have to reassess to receive that. And also at the same time, there's a change in how much you make payments to your employees for that JobKeeper amount. So there's nothing, it's totally different program almost. So kind of keep that in the back of your mind.
So it's like, don't, yeah, forget what you know already about JobKeeper 1.0. Is that basically the sentiment?
Almost, yeah, almost. There's a few similar things, but yeah, there's a, it's a change, it's a definite change. And we can see that with the efforts of, you know, making sure that the help goes to the business that actually struggle and the employees that really need it.
Yeah, wonderful. Awesome. All right. And also just a reminder, we have to throw this in there, but this stuff's to the best of our knowledge at the time. I think the government's had a bit more time to release the rules around JobKeeper 2.0 than they did 1.0. And I think we've had about a week's notice rather than about 1 or 2 days. So that's been quite comforting. There's still some fine print and some ATO guidance to be confirmed. And especially like what we see is a lot of practical issues that pop up as we go. It's not like we can sort of predict every outcome for businesses, and so sometimes where they're calling the ATO on the client's behalf, just sort of working out how we might approach maybe some weird thing about the client's application. Also, with this stuff, we see it's changing. Mostly, it changes for the better, which is what we've been seeing consistently since March. Cool. So I might do the recap and on JobKeeper 1.0 and then mention the changes or the key changes with 2.0, and then I'll hand over to Riz for the alternative tests. And so what we're looking at now is a bit of a info sheet that the Institute of Chartered Accountants have put together. So I'm going to go through each section one at a time, and we might start with employer eligibility. So, the end date for JobKeeper 1 was literally Sunday. So we're actually in the JobKeeper 2.0 zone from the 28th of September onwards, which was yesterday onwards. And so now we need to make sure, if we are eligible, we need to make sure we're doing the right things to be able to claim that. So the basic tests for JobKeeper 1.0 was a 30% decline in projected, that's a key word, projected GST turnover, 50% decline for businesses turning over more than $1 billion, or a 15% decline if you're a registered charity. Now, the interesting thing is that there's no change to the decline percentages with JobKeeper 2.0, but the key word here, projected, that's where we kind of see a key change. So to be eligible from yesterday onwards through till the 3rd of January, we need to measure the declining actual GST turnover in both the June and the September quarters to the 3rd of January 2021 relative to the 2019 periods. Riz, can you just double check for me that that's actually just the September 2020?
Yeah. So something that you might notice is the rules of JobKeeper change every other day as they see fit. So the information that we've received here is what people would have heard if you haven't got caught up recently. And a lot of people don't, because, oh man, there's so many things, you know, I'm being overstimulated by the JobKeeper information coming through. Now, if you've heard that you have to satisfy the June quarter as well, that is in effect not correct anymore. So they removed the June quarter requirement for you to be eligible for 2.0. The reason for that is exactly what happened in Victoria. So when they launched this rule, when this change came in Victoria, it started getting really bad. So if you were going to measure what your June quarter looked like, it wasn't going to be really helpful for everyone. So what they did is they removed that June quarter. Ooh, got some.
Sorry, is my screen freezing up a bit? That's so good.
It's a bit of your download screen is showing.
Okay, cool. Sorry, I
So
just got
yeah,
to restart.
that's okay. So as I was saying, the June quarter is not something that's included anymore. So we're only looking at July, August, September quarter. So the quarter that just passed. So what we're going to have to look at is that July, August, September quarter versus July, August, September 2019. So if your turnover for this recent quarter that passed decreased by more than 30%, this is for just small businesses, then you're eligible for the JobKeeper. Now, like Ben said, you have to use actual amounts rather than projected amounts. Previously, you can use projections and making predictions in the future. Right now, it means you have to use actual. So September is ending in a day's time, so tomorrow. So if you have your zero files or MyObs or anything else, you want to get that reconciled and up to date as much as possible. That's a practical thing I would say, because you can immediately see whether on just a basic test do you pass the JobKeeper turnover test for September. Now that means that if you pass that, then you are able to claim the JobKeeper 2.0 from October to December. Yeah, so that's that period there. Now Ben was mentioning how there's the second period as well. So in the second JobKeeper, which is January to March, 4th of January to March, you have to pass the actual turnover between October and December 2020 versus October and December 2019. So in a nutshell, it's all supposed to be just actual results of September quarter 20 versus September quarter 19 for the October to December period. And then for the January to March period, it's actual results for December quarter 20 versus December 19 quarter. That's kind of like the nutshell version of it. So yeah, some stuff that happened that people straight away said, Riz, I'm not going to pass it based on my actuals. What's the alternative test? If you're thinking that straight away, don't worry, we're going to run through some of that at the end of this.
Yeah, no, that's good. And I guess the reason why they changed the rules around here, so I've actually crossed out the stuff that's no longer relevant. So originally they intended to say that you must suffer a sustained loss of 30%, and that's consistent over the June, September quarters and even onto the December quarters. But what that doesn't account for is things like what happened in Melbourne, where we saw Melbourne opened back up after the first wave, and then we've gone into lockdown kind of, I can't remember the exact date, but maybe towards the end of June. So a lot of businesses might have had a cracking June quarter after the initial hit in March or maybe April. And now they're back into a sustained loss of, we'll call it 30% or more. And under the original rules, they weren't eligible because they'd had a good June and then a bad September, so they've just changed it to say, look, you only need a bad September quarter to claim in December quarter. And then in terms of the next eligibility window, you need a bad December only quarter to claim the March quarter in 2021. So that's kind of the difference there.
And just going back to the government changing things, you can see how the government's no longer committing a full 13-week fortnights of JobKeeper, that's long-term 6-month period. They're going quarter by quarter. So you got the December quarter, the March quarter, who knows, there might be more extensions. But what they're trying to do is stay quite flexible to see whether the JobKeeper is required each quarter. So you test on that. But you don't have to make a commitment of a 6-month quarter like the first one.
That's it. Awesome. Alrighty. Now on to the JobKeeper 2.0. This is more the payment rate change. I guess originally JobKeeper was $1,500 per fortnight, regardless of the number of hours that person worked. So what we saw is, let's say you've got a full timer who might be paid 80 to 100 grand. The $1,500 per fortnight was to subsidise their wages. But let's flip that, where you might have a casual worker, even working 1 day a week, maybe a part-time 1 to 2 days a week, and they're originally getting paid less than $1,500 a fortnight. Some people actually got a pay rise just due to the JobKeeper top-up. So what they've kind of done to address that is, if you've worked, depending on your hours worked, it will depend on your payment rate for you and your employees. So where they kind of drew the line was 20 hours per week. So if you, on average, if you work 20 hours or more, and we'll go in terms of the dates that needs to be checked from in a sec. But if you work more than 20 hours on average, then you get the higher rate of 1,200 a fortnight from September through to December, and then that drops to $1,000 a fortnight from January through to March next year. But if you've got people who on average work less than 20 hours, the JobKeeper rate halves for them. So you only get $750 a fortnight in the December quarter, dropping down to $650 a fortnight. So it's about half the rate of the 20 hours or more one.
So you can see the government doing this again. They're taking a blanket rule in the past, 1,500 regardless, how many hours, doesn't matter. And they're doing two things. They're first tapering down the amount of support that's given, so reducing the payment amount, but also they're also changing the way that it's who receives that. It'll be the employers that are actually, call it long term, that's the easiest way I can explain it, who works more in a permanent basis or more consistently rather than someone who's on a casual. So that's why the hours portion came in. So they're kind of drilling down to a little bit more granular details on who's to receive this. In response to kind of changing the support going forward.
Awesome. There you go. Cool. So in terms of the 20-hour test, we actually look back to February 2020. So that's just before COVID kind of made things a bit weird in the world. And so tier one, so I guess that's another distinction, or the name they've called it. Tier one is this one here. Tier two is the lesser amount. So we need to look at kind of the average hours worked in February. Now there is also discretion to look at the month of June, isn't that right, Rez? Yes. So if you had someone start after March in your business who was employed at 1 July, they could be eligible for JobKeeper now. And so they wouldn't have been working in February if they've been hired after the 1st of March. So for cases like that, then you can also test their average hours worked in June, which is actually pretty nice. Yeah. So also, there is ATO discretion to apply an alternative test if the employee's hours were not usual during the February 2020. So I would imagine that's things like sick leave, maybe maternity leave, maybe off work with an injury or something like that. We can have a look at seeking out some discretion there. And let's say they've picked back up since in hours. That might be really good evidence to show. And then the employer must nominate which payment rate is being claimed for each employee. So that'll be in the JobKeeper reporting. So in the initial reports, we sort of said, hey, look, here's our eligible employees. We had to list all their names. Some payroll software like Xero did a lot of the heavy lifting there for you. But now we'll need to go and further declare which rate that people are on, including the business participant.
That's right.
Yeah.
So just want to dive a little bit on that. So essentially what they want to see here is just before COVID hit, which is February, did you have a full-time employee or 20 plus hours, this is a test, per week that they have. So if they work for more than 20 plus hours per week in the period of 4-week period, so that's 4 weeks, so that's total 80 hours, then they will be eligible for tier one. So you need to look at your employee list and look through all of them and go, which are the ones that are, call it full-time. I want to call it full-time to make it easy. The full-time employees, which are going to be eligible, and which are the ones that are not going to be eligible or who work less than hours, casuals and things like that. So there'll be 2 periods where you can test that. Like Ben said, there'll be that February, so just before March, 28 days, 4-week period before March, and then also 28 days or 4-week period before July. That's because you have new employees that could join in. They could be eligible as well before July. So those 2 periods are the periods that you can look at whether they are the tier 1 or tier 2. Now, if they don't meet the 80-hour test or 20 plus hours per week here, there are alternative tests like Ben's outlined there. And that's where, yeah, it's a little bit complex, but there's ways where they will look at your circumstances and then see whether the employee is meant to be in tier 1 or tier 2. So should they get paid more or not? So yeah, there's a little bit more complexity in there in drilling down whether your employee is in tier 1 or tier 2.
Yeah, wonderful. Awesome. And I guess to wrap up the 20-hour thing, when these rules or JobKeeper 2.0 was originally announced, it wasn't clear on how that would be applied to the business participant, or if you're a sole trader, the sole trader. But the 20-hour rule does actually apply to you, and the key there is actively engaged in the business. Now, I guess from a how do you work that out perspective, a lot of business owners don't actually keep timesheets and things like that, so I wouldn't imagine that's simple, but I think you'd have a fairly good idea. If your business is your full-time vocation, I think we'd probably pass a 60-hour test most of the time, 60 hours per week. But yeah, but if it is a part-time thing or something on the side, just be careful, because there are massive penalties for making stuff up with JobKeeper, cash flow boost, all this sort of stuff. Severe penalties for kind of making intentional claims.
And the way that they've the ATO's kind of put guidelines here is for you to declare, essentially, for you to make a declaration, and declarations kind of like the border declarations. You don't want to make false declarations. You might be on the news, but essentially they will ask you to make a declaration that you work 20 plus hours per week, and submit that as part of putting yourself as an eligible business participant. Now the proof behind it, again, I would work out a way to at least justify or substantiate that, so that if they ever come back, you can always show working behind it, rather than just, oh yeah, I do work. Which, business owners, more than often, if they're actively engaged, like Ben said, is going to be pulling some heavy hours in any case. So, but just writing something down is important.
That's it. Awesome. All right. Well, do we flip past one? No, that's it. Cool. All right. Well, we're here to talk about probably the media bit, which is the alternative tests. So, Riz, would you like to walk us through the overview of the 7 available alternative tests? And then I think, Riz, you're actually going to pick 2 of those to drill down on, the 2 most common, because we just, practically we don't have enough time to go through every single one in massive detail. We just pick the bigger ones.
That's right. So before I kind of dive in, I do want to say that the alternative test has already existed since Jobkeeper 1.0. So just a recap, the reason why the alternative test exists is because of the eligibility criteria for businesses to meet a 30% downturn in their turnover. And the original test is to do with comparing. So if I'm using Jobkeeper 2.0 right now, you have to look at September 2020 quarter turnover versus September 2019 quarter. And if there's a 30% downturn, you tick the box and then you go through the and apply for Jobkeeper. Now, if we look at that situation, the part that most business, or not most, but the challenge that some businesses go through is when comparing July, August, September 2020 versus 2019, it's not actually a comparable period, because either one of the 7 issues pop up. So I'm going to pick on number 4, which is the easiest to understand, is that if you had a substantial increase in turnover in July, August, September 20, obviously when we compare it to July, August, September 19, then we're not going to meet that 30% downturn. But that doesn't mean that your business is not going through a hard time. It's just that your business is a growth business. It's going through a growth phase. But if COVID wasn't here, you would have had way more in revenue. You're still experiencing a downturn. It's just that when you compare it to 2019, it's not as good. So, the ATO saw this, the federal government saw this, and they introduced alternative tests. And this is the 7 scenarios in which you can apply for alternative tests. Basically taking that 2020 versus 2019 comparison and throwing it out the window and using this version instead. Now, as you can appreciate, it's quite complex, because it really comes down to the facts of the case and the numbers in your business. Now, we've put asterisks on 4 and 6 because that's the most common one that we've seen when we applied it for Jobkeeper 1.0. Alternative tests 4 and 6 are the ones that usually trip up businesses for not getting Jobkeeper. So again, staying on that high level, if you don't pass because of the not meeting, comparing 2020 and 2019 September quarters, don't abandon the whole hope of applying for JobKeeper. I'm not saying go and try and meet the criteria, but if you genuinely did have a downturn and you know your business, there is alternative tests for you. That's what I'm trying to say. Okay, so in this part here, I'm just going to run you through alternative test number 4, which is when a business has substantial increase in turnover. There's a lot of words there, but I'm going to make it super simple. So there's 2 parts whenever you want to use an alternative test. The ATO says you need to be eligible to use the test first. In other words, you need to tell us that why aren't you using the original one? Why do you need to use this alternative one? So to be eligible, there's 3 ways that you can be. So number 1, I'm just going to read it out first and I'll explain it. 50% or more in the 12 months immediately before the applicable turnover test period or before 1 March. So what it means is that you have a substantial increase in turnover by 50% or more in the 12 months before the turnover test period, before 1st of March. Now, what this means, or before 1st of March, what this means is you want to look at your turnover test period first. So if we look at September quarter, July, August, September 2020, that's our test period. We want to test that revenue there. Let's say we have 100,000 in revenue. Now, there needs to be a 12-month increase for the month before. So it'd be July. Does that make sense? So, sorry, it'd be June. So if it's July, August, September, the month of July 2020, whatever your turnover is then, needs to be 50% more than July 2019. So it means that it shows in July 2019, you had 50 grand in turnover. In July 2020, you had 100 grand in turnover. You're a business that's increasing in growth in revenue. So you pass that test. So you pass that test in saying to the ATO, I don't need to use the original one. I can't because I'm a growth business. Look at my turnover for July. That explains it. So if you pass that on 50% or more, then you can use the alternative test. I'm not going to go through the rest just yet, so keep it simple. Then you can use the alternative test. So the alternative test says that you can either look at the, you look at the 3 months immediately before the test period. So if you're 3 months immediately before the test period, which is in this case, July, August, September quarter is our test period. We look at April, May, June. So in that 3 months test period, has there been a 30% downturn versus our September quarter? So essentially what they're saying is, okay, cool. You're a business that's growing. Obviously you can't use 2020 versus 2019. Doesn't make sense. You're growing. So we're just going to look at between the 2 periods, September quarter 2020 versus June quarter 2020, essentially. Have you experienced a 30% downturn there? So it's not 2020 versus 2019, it's just, closer together. That makes sense because if you're a growth business, you should be growing in those 2 quarters. If you don't experience that growth in those 2 quarters, cool. Then you pass the alternative test, you can apply for Jobkeeper. Okay, where that was quite simplistic. There is other ways that you can do this. Like I said, you can meet 50% or more in the 12 months, 25% or more in increase in turnover for the 6 months. So if 12 months doesn't work, 6 months, and then 3 months. And essentially what they're trying to give is a bit of leeway in terms of how you can pass this test. So this test hasn't changed since Jobkeeper 1.0. It's the same test. The difference now is that you have to look at your current actual turnover for July, August, September. You can't use projected versus the last 3 months if you pass this test. So alternative testing is not something that I usually say to DIY. Get your accountants to help you with this. This is not something that you just want to be back of the napkin. Yep, cool, I pass. It is quite complex. You have to prove to the ATO. They're not going to ask you to submit all this, but you need to have some sort of proof if they ever come back to you and ask you, how did you pass this test? How did you apply for JobKeeper? So you just have to be very careful with alternative testing, because I'm not saying we're pushing the envelope, but if we don't pass the original test and we don't pass the alternative test, really you're not in one of those businesses that should be receiving JobKeeper. If that makes sense. So yeah, so that's alternative test 4. I know I'm going to get a few questions about that, but feel free to pop in any Q&A stuff that you have there for the alternative test 4. But I'm going to move on to alternative test 6. Which is for businesses that has an irregular turnover. So unlike the other one where your business that's growing, you're a business that's just irregular. This turnover comes in chunks. The reason for that is if we're using the same scenario again, we're comparing September quarter 2020. We have a lot of income, but September quarter 2019, it could be nil because how chunky our income comes through. So it's irregular. So this sounds a little bit more complex, but I'm going to try to explain this as simple as possible. Essentially, what we're looking for here is you're looking at the quarter before the test period and looking at whether the turnover for that quarter for the last 12 months, for the last 12 quarters, for the last 12 months, for the 4 quarters in the last 12 months, whether the lowest turnover is 50% of the highest turnover quarter. Essentially, what it means is you're looking at, let's say we're looking at March 2020 turnover test period. Now, the 4 quarters before that will be December 2019, September 2019, June 2019, and then March 2019. Now, what you need to determine is in that period, which quarter in the last 4 quarters is your lowest quarter in turnover. Let's say if it was December, and then let's say with $1 million in revenue in December, and which one is your highest? Let's say it was June 2019. So it's 5 mil, for instance. Now, if it was 1 mil and 5 mil like that, you can see that because the December quarter is 20% of the turnover in the June quarter, you can see that it's showing that it's an irregular business. It's a business that doesn't have a consistent amount. It's going chunky. So it proves the point that you can use this alternative test. That's what it's saying. So you can use that. Now, if that applies, then you can choose 1 or 2 ways to apply the alternative test. If you're applying a monthly test period, you can look at the 12-month average before that test month. So if let's say if it's July, August, well, if you're using July, it'd be 12 months before that. But if, in this case for Jobkeeper 2.0, we're looking July, August, September, we're using quarterly test period. So July, August, September actual turnover versus the 3-month average of the quarter before. So April, May, June versus July, August, September. Again, with all these complexities, what we're actually looking at is not comparing 2020 quarter, September quarter versus 2019 September quarter. We're looking at comparing just what's next to each other, September 20 versus June 20. And if you experience a 30% downturn, then you pass the test. Again, I would urge that you get your accountants to help you with this, because the alternative test is quite complex. And you want to make sure that you have all the numbers ready if the ATO ever comes back to ask any questions. But what I see in the last kind of 3-4 months when we're helping our clients with Jobkeeper 1.0 is this 2 tests has been used. And more often than not, the reason why the business owners come to us and say, Riz, I really think my business, as we can see in that poll, some people say it's worse. I can feel it, it's worse. I know my business, things are not going as well, but I don't pass the original test if I just look at that one. More often than not, they do pass the alternative test. And because the truth is, they're experiencing a growth business, and that's most of our clients. They're going through usually a growth period, and then also they might have a irregular turnover. So this is the stuff that we want to make sure that we check off before saying, hey, look, too bad, so sad. I'm not going to be eligible for Jobkeeper 2.0. So yeah, those are the two alternative tests. I'd recommend getting in touch with your accountant or with Wes if you don't have anyone helping you just yet, to help you run through that the testing essentially. Yeah, I see we have a few questions coming up as well.
Wonderful. We'll let the team answer those ones there, but that's good, and just an invitation to ask any more questions about that. I'll just pop up the list of the alternative tests before we move on again. So we've got businesses that started after the comparison period, as in September quarter 2019, but before the 1st of March. Acquisitions or disposals that affect the change of turnover, restructure, substantial increase, which Riz just covered, drought or natural disaster, irregular turnover, which Riz also covered, and then sole trader or small partnership with sickness, injury, or leave, which is a kettle of fish all on its own. So they're the alternative tests. Again, our accountants are there to answer questions, and also just a reminder to just pop them in the Q&A box rather than the chat box. We can just track them easier that way. Cool. Riz, would you like to take us through what doesn't change when we look at JobKeeper 1.0 versus 2.0?
Yeah, so there's some practical things that you don't have to do, which is great. We don't need more things to do. So to claim for fortnights in JobKeeper Extension 1 or 2, you don't need to re-enroll if you're already part of it. So if you already are part of JobKeeper 1.0, sorry, Extension 1 or 2, meaning December quarter that you can claim for, or the March quarter for next year in 2021. You don't need to re-enroll for the extension. You're already enrolled because you're already part of the JobKeeper program. You don't need to reassess employee eligibility or ask employee to agree to be nominated again. So don't confuse that with new employees that want to join the program, or new people who want to join the program, new businesses that want to join the program. If you're already part of it, essentially the practical thing that you can do is, if you have 0, you can actually run through your payroll page. There's a payroll support page that will outline all your employees that are eligible. And with JobKeeper 2.0, it will actually ask whether which tier are they on, assuming that you are eligible as a business. You meet that decline in turnover test first. So you don't need to do the re-enrolling, all that stuff again, but there will be a lot of testing around how many hours your employees work, which tier do they belong in, testing around your actual turnover of September 2020 versus 2019, or alternative tests. So that's stuff that still needs to happen. Like I said, JobKeeper 1.0 has finished. You have to reassess for this one. And also, you don't need to meet any further requirements if you are claiming as a business participant. So essentially, if you're already claiming as before, you don't need to change that over. Unless, again, all this stuff is assuming you are eligible as a business. You need to still test your turnover first before you move forward.
Cool. Awesome. So that's what doesn't change. Now, oh, hang on. That one didn't go the right way. Key dates. Cool. Take us through the key dates.
So we are on the 29th today. So we're 2 days into JobKeeper 2.0 land. Everyone might be asking, oh, Riz, what's happening now? How quickly do I have to do this? Essentially, the government's given a bit of an extension. Now, if you were part of JobKeeper 1.0, you would understand that you need to make your minimum repayments for all your employees to top them up to that $1,500 each fortnight, to make sure that you can claim that at the end of the month. Now, if you qualify for this second lot of JobKeeper, they're saying that you can back pay them. So obviously, it's going to take time between now until you reassess your eligibility and organize your employees into tier 1 and 2. And then if they're in tier 1, make that top up payment to $1,200. If they're in tier 2, $750. So you have to organize all that first. So they're giving us a bit of time until the 31st of October to organize all that, make the top up payments, and then yeah, just keep continuing that all the way up to December. And I expect there will be an extension again for when we have to reassess our eligibility again in January for the January to March extension as well. So what I'm saying here is get your ducks in a row, but don't stress too much. We have time to make that payment, but we have within the month to get that all sorted out. Second thing is business monthly declaration is still due for the 14th of the month. So if you were on JobKeeper 1.0, you still have to make your declaration. Well, it's not the end of the month yet, but by the 14th of October. So it'd be submitting a claim, the final claim for JobKeeper 1.0 by the 14th. That still doesn't change, but just want to put it out there. That's two things you need to do with regards to JobKeeper this month, in October. Submit your claim if you're part of it, and then reassess for the next one.
Wonderful.
And lastly, and enrolling after September. So so if you want to enroll after the September point, you just have to make sure that this was something that was not clear in the 1.0 version. But if, let's say, you want to enroll after September, you just have to make sure that you enroll before the end of the month. So let's say for October, we enroll, on the 28th of October. We just make all the back payments before the end of the month, so that we can claim that in November. So if, let's say, you don't do it in October, you do it in November, my understanding is you can't actually claim October JobKeeper if you re-enroll in November. You can only claim going forward. But what they're saying here, it's within the month, before the end of the month, because that's when they reimburse you. They reimburse you for the month's worth of JobKeeper you've done. And what it looks like is, as long as you re-enroll somewhere in that month, it looks like you can claim for that month as well, as long as you make the payments before the end of the month. But unlikely for the previous month, though. They'll close those applications essentially. Cool. So those are some key dates. The other practical thing as well is, please, if you're on autopilot with your JobKeeper, which most of us love doing as well because we have too much to do, just remember that you should have paid your final $1,500 top up for JobKeeper 1.0 done. So if you have another pay run this week, or that's due this week, check the payment dates on those ones. Check whether that falls within JobKeeper 1.0 or 2.0. Because in this transition, if you don't stop it, you might consequently accidentally pay your employees some extra top up that's not part of JobKeeper 1.0 because that's finished, but you haven't reassessed your eligibility for 2.0 and you've just paid that for nothing. And yeah, there'll be all that mess for, hey, give me a refund, it's a credit, and all this stuff that you don't want to go through with your employees. So be careful if you're on autopilot for that. This is a transition period. So if you made a payment or anything like that, just keep an eye out for it. And if you haven't, stop, obviously. Make sure that you've made all the payments that's needed for September. Make the claim for September on the 14th, and then that's it for 1.0. And then you have to reassess for JobKeeper 2.0.
Wonderful.
Yeah.
Alrighty, going to see a few more questions coming through, but almost as quickly as they're asked, they're being answered by the team, so that's fantastic. Maybe just some other notes as well. This isn't kind of JobKeeper technical stuff, but more so business management, or call it cash flow. Just sort of being aware of that. But on a webinar probably about a month or a month and a half ago, we shared some ideas of getting your business ready for after JobKeeper ends. So, for some businesses, the end might be literally yesterday, Monday, because they might not be eligible for JobKeeper 2.0. But if you are eligible going forward, then your endpoint for JobKeeper is potentially from January onwards or from April onwards. But some things to check is your business making a profit without the stimulus measures, so cash flow boost and JobKeeper. So we've got a webinar recording that goes through, like, literally in your Xero file, how to run the reports and separate out your stimulus measures, so you can see your profitability without the without the JobKeeper and the cash flow boost, and just to see that you are making a profit. If not, then you really need to make some business decisions, commercial decisions on do you need to reduce your expenses? What do you do to bring sales in, and that sort of thing. And also a reminder, a lot of business owners have done this, even we've been seeing with clients, even from a personal expense perspective. We've seen a lot of families review what they're spending their money on, even right at the start of COVID, that happened with a lot of our clients. But you do need to review your expenses and adjust if needed, and also put aside a cash buffer. I've actually noticed that quite a lot of our clients have lots of cash in the bank, but not necessarily from trading activity or operating profit. It's actually been from the cash flow boost or the Jobkeeper payments. They've got huge sum of money in some cases, hundreds of thousands, depending on the business. But what I would do is actually keep that aside as a cash buffer. That's hugely important for trading out of these conditions. So if that's you, then yeah, protect that. And ideally, it's at a separate bank to your main business trading activities. So to a degree, it's out of your sight. So you're never tempted to kind of, oh yeah, I'll just spend money on this or that. So that's some sort of tips on getting the business ready for going without the stimulus measures. Also, I might just throw an invitation out. If there is anyone who's got more specific questions than what you've answered or asked in the Q&A box, or you do want to have a chat to one of our accountants about Jobkeeper or anything else, then feel free. Rose, would you be able to just post the link in the chat box so people can click that one? But we're actually, I think we've even got availability today on today or tomorrow. If you do want to chat with one of our accountants, there's no obligation to work with us going forward. But if you do need help, then that's I guess the first step to working with us. Also, just while we're on the call, we've got 2 more webinars in the next fortnight, which we're pretty excited about. We haven't done a lot of webinars probably for the last month or so, but we're back on the train. So the first one we've got is a topic about self-managed super funds. This is actually this Friday, and we're going to cover different things like buying commercial or residential property in your SMSF, your SMSF becoming your own bank, so lending money from your SMSF to other people. And Rose has actually just popped the link for this webinar in the chat box as well. Investing or angel investing in private companies. So, let's say you've got a mate who's looking for some investment, then you might be able to do that through a self-managed super fund, depending on what the deal is there. Also, this is something we've helped quite a few clients through. It was actually property development with super. So there's a number of different structures and ways we can do that. But we've seen some clients use their super balance to fund property development, even funding outside of a development outside of super, which is pretty cool. And then also just some insight into growing your wealth in a low tax environment. In fact, there's ways that you can even get a 0% tax rate in super, which is fantastic. We'll also leave plenty of time at the end of that one for Q&A, but that's perfect if you've been wanting to know about SMSFs. We've seen a lot of clients actually set them up. I think we've probably set up close to 8, 9 or 10 super funds in the last couple of months. It's been huge. So I'm not sure what it is, but people probably wanting to take a bit more control over their super. Also, another webinar. This one's on Thursday, the 8th of October. And I just want to double check the dates because we had a mishap. I'm going to double check that Thursday it is. So Thursday, the 8th of October is our federal budget debrief webinar. So usually the budget is actually announced in May of each year. I think it's like the second Tuesday. Yeah, that's it there. But given COVID was going down, they didn't actually drop the budget, the federal budget in May. It's actually moved to October. And I'm pretty sure it's actually being released on Tuesday the 6th at night time. And so on the Thursday following, so Thursday the 8th, we're actually going to have a look at the budget debrief. Now, the topics we're going to cover, we're not going to cover the whole budget, but we will cover basically for our client base, what's the relevant stuff they need to look at. So we're going to cover anything that affects business owners, including those COVID affected, but also those who aren't COVID affected or may not be receiving the stimulus measures. We're going to have a look at self-managed super funds and what that might mean. Sometimes the rules there are tweaked. COVID actually saw some changes for the better for both of those things. Like business owners, we're seeing less corporate tax rate. Maybe that's being brought forward from what the use the dates were originally. And for self-managed super, we've seen things like pension minimum withdrawals each year reduced, reducing the burden on people taking money out of our favourite little tax environment there. Also, high-income employees, we're going to cover what the changes are, and also investors. So things like, how we're going to see the franking, anything going to happen with franking credits this year? I doubt it. I don't think anyone's going to touch that one for a while, but anything that's relevant for investors will also cover as well. So Rose has posted the link to both webinars and also our strategy call, if that's of interest to you. And apart from that, that's about it from Riz and I. But we are going to stay for the next few minutes if there is any more questions that come through. But I just want to thank you for joining us this morning, and yeah, all the best with navigating the JobKeeper 2.0 landscape. Just going to pop up on that screen there. But yeah, feel free to ask any questions, and thanks again for joining.
Hey, Ben.
Yes.
You can share the screen quickly. I just want to share one more thing while everyone's asking questions.
Yeah, go for it.
I'm just going to...
Thanks, Laurie.
Cool. Hey, some practical cool stuff here. If you have Xero, this is a demo company in Xero, what you can do, you can go into payroll and click pay employees. This is fake employee page, but there's this payroll support page here. Xero's been really good in terms of supporting our small business owners through this landscape now. There's a section here called new to JobKeeper payments. This is if you're totally new and you've never applied for it before, you go through those steps. Now, there's also a new section here called Jobkeeper Extension. So it's particularly to do with this extension. So you can read more info about what we just talked about, but basically our webinar ran through the changes and your requirements to be eligible. That's all in here. But also, once you've done that, you can then determine, are your employees eligible, or do you need to stop Jobkeeper 2.0 essentially and just stop them? So that's the kind of the next steps. Now, if you click into here, James LeBron, James LeBron here, he's potentially eligible. You can see that they've also allowed you to select which tier your employee should be in, tier 1 or tier 2, to organize your employee properly. The reason for that is when it will feed through whenever you make your pay runs or your payroll processing, it will actually show which tier they're in, and it'll allow you for you to check before you make those top-up payments every week, fortnight, or whenever your pay cycle is. So yeah, so that's a really helpful way of going through it as well. And yeah, if you need, like we said, if you need any help in terms of getting organized for it in the next month, even to check off, get in touch with us. We'll do all this for you. We'll arrange your employees, check your eligibility, do the testing, do alternative testing if required. We'll do all that to make sure that you get to a point where you're reassess, you're eligible or not. And we'll be able to set up Xero predominantly so that you can then it's kind of like set and forget until the next Jobkeeper extension as well. So yeah, so we have had clients who have gone through that whole process with us, and it's been fairly smooth in terms of getting our clients on that Jobkeeper program and then doing their monthly declaration going forward. They just roll in at the end of the month and they just get that Jobkeeper reimbursement almost automatically because we're doing most of the heavy lifting. So yeah, if you guys feel like that's a support that you need, feel free to get in touch with us. We can help with that.
Wonderful. Awesome. Alrighty. Well, I think that might be it from us. If there's no more questions, again, just one final thank you. Thank you, Olivia. Good to see you here. But yeah, that's I think that's about it. And thank you, panelists. Thanks to our team and also Rose for putting the logistics on this webinar together.
Yeah. And also just, were they going to get a recording? Is that right, Ben?
Yes, so anyone who registered, see Liz's comment there, we will be sending a recording out, might be later today, this afternoon, or at the latest early tomorrow. We'll send that out to anyone who registered, which is cool. All right, well, thanks again, and we'll see you hopefully one of the next webinars.
Awesome. Thanks, Ben.
Thank you.
Okay.